Stand face to face and present your case. Yes, I know you keep telling me that you love me. Good morning, everybody. Happy Monday. It's July 1st, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We come at you every Monday and Thursday, about 8:30, 8:45 in the morning. Talk a little bit about the markets, the economy, the Fed, anything that that we can discuss about what the markets did and what the markets may continue to do going forward. So first half of the year is over. It's time to blow the whistle. It's halftime. And pretty impressive move by the large cap stocks in the first half of the year. Nasdaq was about 17% in the first half of 2024. That's coming off of a 53% gain in 2023. S&P 500 for its part up 14%, which was a tremendous gain following last year's 24% gain. But if we can toot our own horn over here, and we're going to do that right now, the EO service, which is the service that I've been running since 2011, also had an excellent first half of 24. In fact, here you go. Here's the numbers. Proof's in the pudding. 24.76% versus the S&P, well, the Russell, that's 1%. Versus the S&P 500, which kind of is our benchmark, 14%. So we're over 10% higher on the S&P 500 in 2024 so far. Now, I wanted to talk and explain about this. Now, what does that 24.76 return represent? It represents the return on risk. What is the return on risk? Well, whatever money that you have or percentage of money that you have that's at risk on options or stocks or whatever that is, anything that is not in cash is called your money at risk. Generally speaking, we'll have about anywhere from 15, maybe probably no more than 20 to 25% of cash at risk that's in the portfolio. So essentially, you could say that about 75 to 80%, maybe more of the portfolio is earning market returns for cash, right? 3%, 4%. In fact, we don't even attribute the cash earnings on the portfolio over here. So basically, it's earning zero. So it's the portion that's being used for buying options that is delivering 100% of the return. So, I mean, if you really wanted to extrapolate this out to a return on risk, this 24% is probably more like 120%, since only about 15% of the cash is being used. Multiplied times 6, that's about right. So it's been a tremendous year so far in 2024. We're happy and proud of what we're doing, so we'll just keep moving forward into the last half of 2024. So let's take a look at the monthly chart. S&P 500 up. Again, for the month, this is the monthly chart. We always take a look at this at the end of the month, at the beginning of the next month, to see where we are. We're still bullish here because this MACD is still positive. The black line is ahead of the red line. So it still says that the bull market is still intact. It's been intact since we crossed over in the summer of 2023. And that's when we pushed higher. With higher highs and higher lows, we are facing an overbought market over here. But look what happened back in 21. We got overbought in 21 and stayed that way for about another good 6 months before we started to falter. We came back down in 2022, right? So we had a good 5 or 6 months where the market was still overbought, and it didn't much matter. The market still went higher. Of course, we had that bear market in 2022, came back down to the 50-month moving average. You can see right there, touched that down in October of 2022, and it's been off to the races ever since. So the point of the matter is, don't look at overbought as a time that you have to exit your positions or exit the trade or exit the market altogether. Okay, just because a market or an index or a stock is overbought, it's a condition. It's not a signal. Okay, it's not supposed to tell you what to do. what it is supposed to do. And when you see an overbought condition or an oversold condition for that matter, pay attention, watch what's going on. And if it falters and if it starts rolling over, then you've got something to work with. Okay. But if you had started to go short when the market went overbought here, and we're talking back in March or April of 2021, well, you got your head handed to you, right? And if your only argument was that the market was overbought on a relative strength basis, that's true, but still the markets kept going forward, upwards, okay, for months, right? We had one bad month over here. This looks like it was in September. October was up, November was slightly down, December was up, and then January was down in 2022. So it had one bad month from in the beginning from 2021 all the way through. One down month, that was it, right? Basically. So again, just because the condition tells you that the market or an index or stock is overbought doesn't necessarily mean you have to abandon it or let it go. Now, this week, we don't have a whole lot going on. We do have Chair Powell talking tomorrow in Portugal. We have New York Fed President John Williams also talking in Portugal on Wednesday, and he's speaking someplace else, I believe on Friday, Wednesday or Friday. So we'll be listening to what they have to say. Obviously, Chair Powell's going to be the important speech tomorrow from Portugal. As far as stocks are concerned, again, we're a little bit overbought. I'm just going to be playing things a little bit close to the vest over here, paying attention to what the market is telling me to do. Currently, right now, we have the S&P 500 up about 9.5 handles. Nasdaq up a little bit. We're a little bit off the highs of the day. VIX, you can see, is up here, paying it back a little bit. Now, don't forget, this week is a short week. Thursday, the markets are going to be closed in observance of Independence Day holiday. It is not a short day, trading day on Wednesday, unfortunately. I wish it was. But we will have a day off on Thursday, then the end of the week is Friday, and that will be Jobs Friday. We have a lot of jobs data coming in leading up to that. We have the ADP report, we have the JOLTS report, we have the jobless claims as well too. So a lot of stuff that's going to be coming in before that print comes out on Friday morning. It'll be interesting to see what happens because the Fed and the economists have been pointing towards a weaker jobs market. We'll see if that is reflected in the numbers on Friday, and if that happens, then perhaps the Fed can start talking about rate cuts in their next conversation. Don't forget Wednesday midday, we will have the minutes from the last Fed meeting, which was at the end of June, middle of June, right? So the middle of June probably talked a little bit about rate cuts and probably talked about some of the better inflation data that came out that week. Remember, the CPI and the PPI came out that week. CPI came out the same day of the Fed announcement, and then we of course certainly had the PCE number that came out last week, which is a little bit better than expected. Those obviously won't be reflected in what the minutes, but certainly is going to be entered into the conversation the next time around when the meeting at the end of July. So don't forget, as we approach the end of the year here, we do have 4 meetings left. We have one in July, September, November, and then December. 4 meetings left, but we also have the very important August Jackson Hole conference coming up, where actually the Chair Powell could say something to move markets. We don't know. It's happened in the past. Prior chair people like Janet Yellen, Alan Greenspan, and Ben Bernanke also made some comments during that Jackson Hole conference that would shake things up. So we'll see what happens. As far as the morning's concerned here, we see Tesla's up a few bucks. CHWY's up a little bit. That Roaring Kitty has a passive stake in the stock. We did pretty well with that one last couple weeks. Apple's up a little. We also see Amazon up strong this morning, along with Microsoft. So you know what? We're going to let the markets decide which direction to go in, right? If it's up, then we're going to be looking for some ideas. We're going to keep some put protection on as well too. We have some of that. So, but this week should be an interesting week. Again, we won't be back for Daily Bites on Thursday because of the holiday, but we will be back next Monday. So thank you, everyone, for spending a little time with me today. Please tweet this out or send it out on social media and share it with anybody that you think might benefit from the Daily Bite. So thanks, everyone. I appreciate you all being here. Have a great trading day and a great trading week and a little bit of a more senior turner. Thanks, everyone.